Hello everybody, welcome back to another edition of the Forex Weekly Forecast. My name is Alexander Nikitin, of course, and if you are new to this series, what we are doing here, we are looking for some good opportunities that may happen or may not happen next week, and also we have a little bit of education here, so you do not walk away with your empty heads, you walk away with a little bit of knowledge. And last time we were discussing reading the price section. After you know how to draw these lines, I gave you some tips on and clues on what this movement of or what the combination of these lines can mean, so you can do some predictions on your own. And also I give you a clue of what is confirmation sign. Okay, and today we will talk more about the Gartley pattern. You know that there are many types of Gartley pattern. Those of you who is saying that the Gartley should be this and that, these traders are absolutely wrong. There are many types of Gartley, so almost every trader is trading his own Gartley. So do I am trading my own Gartley. So stop telling me that I'm trading wrong. Trading wrong. You don't know what I'm looking at. So in this video I will clarify my thoughts. And to do that, to demonstrate my thoughts, I am to draw a picture. The origin of the Gartley pattern belongs to Harold Gartley's books Profit in Stock Markets, and it's found on the page 222, and it looks this way. Just have a picture of that. Boom boom boom, some kind of this and that. So this is what is Harold Gartley calls the Gartley pattern. So what he points here, do we see any ratios? No ratios. Do we see any Fibonacci confluence? No Fibonacci confluence. But he says every time you see the zigzagging pattern, zigzagging type correction, you should sell your Gartley in anticipation that it will continue. That's it. Just zigzagging correction, complex correction of zigzagging. Okay, so what you will understand by this zigzagging correction, it's up to you. What rules you will have to identify in this zigzagging correction, it is up to you. First, what you need to have some violating movement, some impulse, and that zigzagging correction. That's it. Okay, this is the origin of the Gartley pattern. And let us go and look at the most so-called the most famous ways of trading Gartley pattern. And the first Gartley I'd like to talk to tell you about is the Larry Pesavento's Gartley, and it looks this way. First, what you need to do first, you need to identify your XA leg. Usually it is an impulse leg. As Larry Pesavento says in his book Trade What You See and others, and in his videos, and I don't know where else. Mostly I've seen it in his videos, that this X to A movement, usually the movement that coincides on hourly chart, it coincides with major highs and lows of daily candles. They are usually daily highs and lows. Okay, and after that, what you need to do, you need to find this correction. Boom. Then you need followed by another correction. Boom. And what you need to do, you just need to clone that, clone it, and paste it to your correction. So if your correction starts moving, yes, like that, if your continuation of your zigzagging pattern starts moving, how will you predict where this zigzagging termination will occur? You will predict it this way. Just copy and paste. And as you stretch some fibs, you will be very amazed to know that the termination of Larry Pesavento Gartley is different every time. Depending on this lag and depending of how deep is this correction, the termination of Larry Passaviento type can be 618, 786, it can be 886, and so on and so forth. So Larry Passaviento's Gartley termination is different. Boom, boom. And also, I didn't see any clues in Larry Passavento's Gartley that say, okay, Gartley pattern's mandatory B point should be 618 or somewhere within the zone of 618 to 786. I didn't see anything. I saw that it should not touch 786 because most likely you have that 786 being an entry. For example, in this case, when you have this first movement being deeper, if you clone that, let me clone it and paste, sorry, paste, your entry will be somewhere within 786 and 886. Okay, what Larry Passaviento implies here is just simple AB equals to CD movement. AB equals to CD. This is the most important thing in his trading. First, the second important thing in his trading. First, you need to identify a swing leg that is usually some coincides with daily highs and daily low, and then you need to identify a zigzagging pattern. Sorry. Then you need to identify a zigzagging pattern. You just copy and paste AB equals CD, so it shows you the entry. Sometimes it is 786, sometimes it is deeper than 786, sometimes it is less than 786. It is different, and your stop loss should be usually above X. So how Larry Passaviento trades this? He's trading it a very common way. He's trading it from this to this, 382, 382 and 618 from your entry. 382 is the first target, 618 and 786 is the third target. 3 targets. And stops roll to break even as soon as the target of 382 is hit. So very simple way. Don't need anything. You even don't need Fibonacci unless you want to calculate the targets. So that's it. Larry Passavento's Gartley. Okay, another type of Gartley is Scott-Carney Gartley, and we have two types of Gartley here. The first type of Gartley is called an ideal Gartley, and the second type of Scott-Carney is called the perfect Gartley. And what is the difference here? I will explain it to you. Okay, Scott-Carney says that in whatever Gartley pattern, to be a Gartley, it is compulsory that B point should be exactly 618. I'm drawing you some chart, and to find that B point being exactly 618, you only can do it this way. Sorry, you only can do it this way. You cannot take the whole movement because it is exactly 50. So you just move your X point until price hits 618. So Scott-Carney is acting this way. He's moving X point, and many times in his books you can see the whole trends being those XA leg. It is not only one impulse, not only single movement. Usually it is several impulses, several movements. Only what Scott-Carney is thinking about is that B point being precise 618. What means precise? I don't know what it means. No clearly cut rules in his book. If price, for example, exceeds that 618 by 10 pips, will it be precise? 618? No. If we have a close above 618, or shouldn't we have any close above? We only should have any spike penetrating 618, or we should just touch and go this 618. And what if we are not touching 618 by 1 pip? What is that? So no clear definition in his book, but the rule says it should be precise 618. Okay, ideal Gartley. I'm explaining ideal Gartley first. Second, what you need after you have that B point being 618, yes, you just place that letter X here, being this is A, yes, and this is B. Boom, boom, letter B. You need to invert your fibs, yes, and look for B to C retracement. And the B to C retracement is valid if you have a retracement somewhere in this area from 382 to 886. So if your pattern exceeding 886, it invalidates the Gartley. So somewhere from 382 to 886. Okay, let it place it near that 618 somewhere here. Yes. This is that requirement number 2. The requirement number 3 says that the ideal Gartley should have perfect AB equals CD pattern. Perfect AB equals CD pattern. This is the requirement number 3. So, and let me mark that line with horizontal line. Where do we have lines? Here. Okay, perfect AB equals CD line is here. Okay, this is the first one. We are calculating the entry. Starting calculating the entry. That was perfect AB equals CD movement. The next thing that is compulsory, that we should have a perfect, good, not perfect, but good confluence of B to C 618 projection. So let me have another line and mark that 618 projection. See it? Boom. So this is 618 projection from C to B, B to C, 618 projection. Okay, and also let me delete these fibs. I already marked them with those with those horizontal lines, and also we should have a 786 confluence also. Okay, what is that? Okay, and also we should have a 786. So guys, what do we have? We have a confluence of 3 lines, and these 3 lines is what is called by Scott Carney a potential reversal zone. So this is his way of identifying ideal Gartley. This zone is called potential reversal zone, and that will be his Gartley pattern, ideal Gartley pattern. It is not the Gartley pattern as it is ideal Gartley pattern. There are differences. Somewhere within this zone, I don't know how exactly Scott Carney gets triggered. It is not a limit order as Larry Pesavento's way of trading. I think he's using his RSI to see overbought or divergence or something like that, but he saying that he's looking at price action within this zone. So what differentiates Scott Carney's pattern? He first combines that XA type that makes the B point be 618. So to do it, the only way is to move your X point from different points. That's why XA legs of his patterns usually contain many swings, not only one swing. Okay, this is the ideal Gartley of Scott Carney. Let's go next. And the next pattern is the perfect Gartley by Scott Carney. Okay, you will be amazed to know that he has two patterns, an ideal Gartley and the perfect Gartley. Okay. After you have found that XA and BC, sorry, and AB being 618, let me measure my eye. Not very clear enough, so your XA should be lower a bit. See that? How it is done? No, it is not measured. First you find XA and then you await whatever price section is given to you. It is vice versa. You first find some BC movement and then you choose that type of XA that more or less coincides. So usually this X is moved higher or lower to see that B point coincides. For me it is absolutely, I don't know how to call that, so let me not judge other people's strategies. I wouldn't say anything. Just here we are just enumerating the types of Gartley we can see. Okay, this is the precise 786 retracement. Nobody knows what precise means. 1 pip away, 1 pip exceeding, if it precise or not. Will it be enough or not? Nobody knows that. Okay, then we invert our fibs to see AB correction to find B to C movement. And here in AB correction, the difference between the ideal Gartley and the perfect Gartley, that C point must be precise 618 retracement. 618. If the ideal Gartley said that B point should be somewhere within the zone from 382 to 886, the perfect Gartley says it must be precise 618 retracement. Okay, and the rest is the same. After you have that C leg, what you do, you are building that potential reversal zone that consists of 3 parts: 786 retracement plus okay, sorry, clone 786 retracement plus 1-to-1 AB equals CD measured move, and also 618 B to C projection. So when you have these three, let me mark them. What is that? It is something red. 618 is here. From here to 786, somewhere here. So your zone stays here, and you see the zone becomes much tighter. It is becomes more precise. That's why the Gartley is called perfect. So the zone is more precise. And as usual, Scott Carney does not give any clue of how he understands that XA leg, of what is his understanding of that leg. He only, what is he thinking about this ratios: B point, C point, D point equal AB to CD, and then inversions and so on. So the zone becomes much tighter, much closer. The zone becomes much smaller, so it is better for you to identify the reversal zone where you and I just remind you, he doesn't give any clues how to trade it, where to place your stop loss, where to place your target. The only thing I know, Scott Carney says that he's using a 382 based trailing stop. Let me delete the fibs and I will give you some clues on that. 382 based trailing stop. What it means? It means that once you have entered somewhere here, just I don't know how you get triggered, and then price goes from your entry point to 382. And so this is the way you put your stop loss to break even. And as soon as price going lower, lower and lower and lower, you are moving your stop loss to this 382. So if price moving lower, lower, continues moving lower, lower and lower, you are moving your stop loss lower and lower and lower. So this 382 distance stays the same. Price moving lower, lower and lower, you are moving your stop loss lower, lower and lower. And when the price turns its way, you are hitting your stop loss, so your net profit would stay this, boom boom, from this to that. So but I don't give any clue. I don't know. I cannot even imagine how Scott Carney is get triggered. His explanations are very vague. He says just looking for some price action, looking for some RSI divergence, overbought, oversold. I don't know. I'm not really interested in that because I have my own approach. Scott Carney did his own research. He calls this research harmonic approach. I did my own research. I call my research ACS based swing trading. So our approaches are different. So if you call my Gartley a harmonic pattern, so please do not do that. My Gartley is not a harmonic pattern. As well as Larry Pesavento's Gartley is not a harmonic pattern, as well as Trade Empowered guys, Akil Stokes and Jason Stapleton, Jason Greystone, Darren Oglesby, Charles Miles, others who are trading their own ratios. Their pattern is not harmonic pattern. The harmonic pattern is that only two of that. If you talk about Gartleys, harmonic patterns are only that ideal Gartley pattern and perfect Gartley pattern that I explained to you right now. Okay, guys, so let's have the Gartley number what? The Gartley number 4. Okay, we have Gartley number 5. If we count that Howard Gartley general description of the Gartley being a pattern, it was the pattern number 1. Then Larry Pesavento's Gartley is pattern number 2. Ideal Gartley of Scott Carney is a pattern number 3. Perfect Gartley of Scott Carney is a pattern number 4. Okay, you all know the Gartley pattern of Akil Stokes. It is not the Gartley pattern of Akil Stokes. Let's call it the Gartley pattern of Trade Empowered. Akil Stokes is just one of those pattern traders who preaches that approach of pattern trading. Okay, and you should know that Trade Empowered guys try to avoid to use word harmonic, and they also trying to avoid to use the word pattern, because the combination of these words, harmonic pattern, belongs to Carney. Carney registered some rights on that, some mental rights, mental property, copyright, blah blah thing. So if you are trading something that is harmonic, you should give credits to Scott Carney. Okay, what Trade Empowered guys do? Trade Empowered guys, first of all, first and the most foremost, the most important, Trade Empowered guys pay much attention to the structure of the market. So first of all, Trade Empowered guys will identify the XA leg. And what is the XA leg according to Trade Empowered? XA is usually an impulse leg that is violating some highs, or in some cases it could be an anchor leg. In some cases could be an anchor leg. Usually if we find some structure at this point, at our potential X point, somewhere nearby in the most recent part, so to speak. So because this pattern will be looking as a counter trend, so you need to have good reason to trade counter trend. So either anchor leg or an impulse leg, the two legs of Gartley pattern. Once you have found the X to A movement, what you do, you measure that X to A, yes, and your B point should be from 618 to 786. It remains valid somewhere within 618 to 786. The deeper it goes, the closer it goes to 786, the better you have a risk to reward. And in a second you will know why. You will, when we'll calculate the entry, you will know why it is. So this is the rule. Not precise 618 is ideal Gartley or perfect Gartley of Scott Carney. It is different. It is a range within 618 and 786. Okay, nice. Remember that. After that, you have a correction of B2C movement. And let us measure this correction, measuring the AB leg. And C leg remains active if it is at least 618 retracement all the way down and not exceed 1 A point. It can be a double bottom, but it should not exceed it even 1 pip. So all the way down from 618 to A point. So as you see, it is not a perfect Gartley of Scott Carney that says that C point should be precise 618 retracement, and it is not a range of ideal Gartley of Scott Carney that says somewhere from 382 and not exceeding 886, 382 to 886. No, it is from 618 to A point retest. Boom. 618 to 8.3 test. And the most differentiating thing of that, is the entry point. So the entry point of this is of trading power Gartley is 127 A to B projection, not B to C as Scott Carney, 1618 as B to C, but 127 of A to B. So you take your fib extension tool from A to B and back again, and 127 will become your entry. And as I told you previously, the deeper your B point is, the deeper will become your entry. And the deeper is your entry, the closer it is to X point. The closer your entry to X point, the better is your risk to reward. So sometimes you can have deep Gartley, the so-called deep Gartley, because you have a deep B point retracement that is almost touching 786. And sometimes you have a regular Gartley with not that much deep retracement of B point. Let it be a bit lower, like that. So, and the entry will stay somewhere here. So that is the Gartley of trade empowered guys, and it is executed with limit orders only. You place your limit order, your stop loss should be somewhere above X point if we are talking about bearish Gartleys. So there are different approaches. Some of them are using 10 pips above X, some of them are using 1 ATR, 2 ATRs, 1 spread, 2 spread about X. Many different approaches. You usually look right to those round numbers if we have some round numbers, so also place your stop loss, hide your stop loss above those. And the targets of this type of Gartley, it is the Gartley number what? Number 5, number 6? And the target is the first target 382 plus roll your stops to break even, and the secondary target is 618 plus closing the half the first target is 382, closing half of your position and rolling stops to break even, and the secondary target is 618, closing the rest of your position. This is the usual way trade empowered guys are trading their Gartleys. Okay, so that's it. Let me first enumerate the types of Gartleys. We have for now. First Gartley is the original Gartley of Harold Gartley. Second Gartley is Larry Pesavento's Gartley. The third one is Scott Carney's Ideal Gartley. The fourth one is Scott Carney's Perfect Gartley. The fifth one is Trade Empowered. They call that Advanced Formation. It is not a Ideal Gartley pattern. It is Advanced Gartley Formation. It is not a harmonic pattern. You should not mix those things. They are different approaches based on different views at the market. Scott Carney is not looking at any structure of the market. He's only thinking about Fibonacci confluences and AB equals CD movements. He's never thinking about swings, never drawing those lines, never heard from Scott Carney to any clues of how to identify the swing legs. I never heard of that. Maybe he has something, but he's never told about that, neither in his video, nor in his website, nor in his books of Harmonic Trader 1, Harmonic Trader 2. Nothing, no clues. I don't know that. So the approaches are different. Relying only on your Fibonacci's and building the potential reversal zone somewhere in the confluence of Fibonacci's, or relying on the structure of the market and building the case for entry, measuring the given XA legs. Whatever XA is given to you by the market, it is different. Harmonic approach, advanced formation approach. Okay, and the next approach is Alexander Nikitin's approach. It is my approach. Okay. It is very similar to Trade Empowered, guys. Very similar to Trade Empowered, guys. The only difference is I also look at the structure market. Okay. I also look at the structure market. But the structure of Trade Empowered, guys, is visual. You just go drawing these lines, you train your eyes, and you do it visual way. I do calculations of my structure. I have some very sound rules. What is the structure? And you will see some lines and rectangles on my charts. These are exactly the calculation of the structure. If I don't see the number I need due to my calculations, then I skip this correction. If I don't see the zigzagging pattern structure in some swings that I need, then I also will skip that correction. If I see something else, if I don't see the higher and higher close, or if I do not see some extension, so I do this, I do this. It is all written in my trading plan. So very detailed ACS explained, ACS based swing identification technique. And if you follow my channel, follow my videos, I gave you some clues of how I draw my swings and how I define the trend within those swings, and how I do my swing calculations. Maybe I am giving you usually one thing at one video. I'm not revealing all the secrets, of course. Okay, so Trade Empowered structure is a bit subjective. So different peoples would look at the same swing and say, okay, we have one single swing, and another trader will look at the same swing and say, okay, it is not one swing, it is several swings, because we have some minor correction in between it, and let me say it is a trend because of several swings and blah blah blah. But the approach is the same. That trend is that zigzagging pattern. Mostly it is the same. And also, what is I giving credit to Trade Empowered, what is most important is the higher close, lower close principle. If you need to have an impulse, it should have a higher close and lower close. That is very important. I'm using that principle everywhere. So in defining my structure, and this only thing can differentiate me either from taking a pattern or not taking. Only this small thing. If I do not have a lower close, I will never take a pattern. Okay, so what is my pattern? Okay, first of all, I need to take a confirmation sign. My XA is only a confirmation sign. What is my confirmation sign? You should look at my previous video. There are some hints, and the video is called what is called? Reading price action. Okay, reading price action. There is this combination of words, confirmation sign. I only take this confirmation sign impulse. It is an impulse. It is not a correction. It never is a correction. Just a hint. As my X to A movement. So once I have a confirmation sign, yes, I stretch my fibs. And what I'm looking at, my Gartley pattern is called Unified Gartley. Unified Gartley pattern. And I'm looking at the retracement somewhere in the zone from 382 to 786. Very deep zone, 382 to 786. Remember that. Unified Gartley, 382 to 786. Let me place 50 for now. Why it is unified? Because you have sometimes you have the ratio of Gartley of 618 if the ratio is deep, and when this ratio is not very deep, it is 50% at 382, you can say, okay, Alex, your B-point ratio is looking like a bad pattern. And I say, yes, it is a unified Gartley pattern. A unified pattern. It is a combination of a bad pattern and the Gartley pattern. They are unified. I don't see any reason to differentiate between these two. I do not see any reason to do that. And my research shows that it is not good to separate a bad pattern as some different pattern. I will explain you in a minute. Okay, after that I need the retracement also very deep of C to B, BC. What is that? BC retracement, and it also should be 382 and not touch A. So very vast area. So let me place 61A here. And what is my entry? My entry will be 786 always, no matter what. 786. I don't give any credit to AB equals CD movement. I don't have my head thinking of that. Okay, why I have the 786 entry? Okay, if you look at my avatar picture, you will see a bad pattern here. Logged as Alexander Nikitin, bad pattern here. That means that I was a fan of trading bad patterns. I love those patterns, so I give some credits to Scott Carney, and I have taken those bad patterns as they are. I traded them two ways. Like Scott Carney says, the bad pattern as a harmonic pattern, and I also traded that bad pattern as an advanced formation, advanced bad formation, sorry, of trade empowered guys. So I've been trading bets because the risk to reward. I've been trading them, and I've been testing them, testing and testing. Okay, and when I grew older as a trader, when I became more and more experienced as a trader, I found that it's not the ratio that is usually turns a trade into a winner. It is a structure. And I started to pay more attention to the structure, started to elaborate some process of identification of the structure, of identification of a swing. And when this research was over, it took me almost 1 year of doing that research. I end up having an ACS-based swing identification technique that we are now using with my students in my live trading room. So This is an objective way to identify structure. I would say this: if different traders are using my same rules, they will have absolutely the same pictures, absolutely the same impulses, absolutely the same corrections, absolutely the same retest, and whatever is there. So if they were told to take only those Gartley which XA coincides with the confirmation side, they will only take absolutely the same Gartleys, absolutely the same ciphers, absolutely the same trades will be placed. So no controversies, no doubtful situations, nothing of subjectivity. Absolutely the same pictures, absolutely objective because it is based on calculations. Do not trust your eyes, trust the numbers. Okay, and when I have that, when I finished my research and I found myself having that ACS based swing identification technique, yes, I just started using it and trading that, and I found that when I tried to trade bets, many times I missed the opportunities that are not starting from 886. I missed the opportunities starting from 618. 786. I miss many opportunities that start from 786, and I just went back to do my back testing, and I say, okay, if I have my ACS based swing identification technique, and while trading that swing identification technique for a long period, I have noticed that many times I see that bad pattern is not touching 886. So let me backtest that thing. Let the pattern be looking like bad pattern, but the entry be 786. And you know what I found? I found that there are so many missing winners if you are trading 786 that there is no point to have lower risk. You are missing more winners. There is no point to have low risk. Okay, I will explain why. Because I am trading that swing trader. I am a swing trader. I identify swings, and I'm looking for extension. If you see somewhere on my trading ideas, you will look at this. These are all based on my research. They are not taken from heaven, not taken from some books. They are not taken. They are all based from my research, from my observation, made back testing. Okay, my risk reward is usually 5 versus 1. You see, if you miss one, yes, you miss $5. If you miss one winner, you miss $5. So having that 886 entry, if you have the 886 entry like this, and you miss 2 winners, you missed $10. Okay, maybe you filtered 2 losers. Maybe you filtered 2 losers, and you know that these 2 losers are almost twice more than bad pattern losers. For example, if a bad pattern loses is 50 cents, then you have lost $2, but you generated 10 on your 2 next, so the net outcome is $8. Understand? So missing the winners of this that much target is not good. Just to have less risk. Just to have less risk. Okay, you have less risk. You have risk twice less. Yes, it is less, about half of that the risk from 786. Yes, and also if you put your entry here, yes, you can say, okay, I can put my stop above, and I will tell you about that a bit later. Maybe I told it already that I only put my stop at exactly at X, X plus spread usually, because if you have a bear pattern, the bid price is that price that is drawn on the chart, and ask price is what the stop loss is executed. So if you want the price to hit the line, you should draw it X plus spread. Otherwise, you will have your stop loss executed and the price didn't touch actually the X point. On the chart it would be seen as it didn't touch the X point. Okay, I've made my calculations, I've made my research work, and it says, for example, if you're using 113 extension for your stop loss, 113 extension, for example this one, yes, this stop loss, this 113 extension says, I use that usually, I used that previously. 113 extensions usually coincide with 180 stop loss, something like that. They usually coincide. Okay, when you use that 113 extension and looking at price action, there is 77% probability if price hit 1, if it hit X, it will hit 113 also. 77% probability. See that? So you are 77 times risking more than needed. 77 times you are risking more than needed. So almost risking twice than needed out of 100. If you are risking one additional dollar, 77 or 100, you have additional $77 loss. Okay, and you only saved 2 or 3 trades, 30 trades of 50. Well, maybe it is a bit if you had that large targets. Maybe it is some reason to have that a larger stop loss, but I like to cut my stops short. So if there is a good probability of price to go higher, I don't want to find myself in this position. So I am placing my stop loss exactly at X. Okay, that's it about my Gartley. The Gartley is called Unified Gartley, and it is something in the middle between the BAT pattern and the Gartley pattern. As you judge the B point, you see, okay, your B point is can be from 382 to 786, and the C point can be from 382 to 8.3 test, and the D point is 786 always. So this is what I called Unified Gartley. It is different from all the 5 previous patterns, and it only based on my research that there is no need to differentiate between the Gartley and BAT pattern in my case, because I'm looking for extended targets. This is the only reason. Why there is no reason to look for differentiation between Gartleys and BATs? The only reason is that my targets are extended. If my targets are extended, then those patterns that I miss, starting from 786, having BAT ratios, but starting from 786, and while I wait in the price to hit my 886 entry, I am missing those patterns. If I miss those patterns with that much large target, that is no good. I am missing more winners than I protect some losers. Let me have a more aggressive entry at 786. So this is why I have that Gartley pattern, unified Gartley pattern. Okay, so that's it for today. What else? What else do you need? You don't need anything else. I forgot about that. Sorry, guys. Okay, let me have a quick look at the market. Maybe we'll find something for the next week. Okay, boom, 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 uptrend, uptrend, uptrend. It is clear uptrend here, boom, 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 boom. Okay, let me see what we had here. Uptrend, uptrend. This is the kind of unified Gartley I can see, but it already played its role, maybe, or it didn't trigger. Yes, B point is okay, C point 760, it didn't trigger. Okay, and let me measure the next Gartley of this. No, this is the 4-hour Gartley, but it would be a good Gartley. Would have been a good Gartley, 4-hour Gartley. So no daily Gartleys. Okay, what do we have? Maybe we have some ciphers. Having some ciphers. Okay, if you look at the price section, what we had recently, we had this long impulse, then we had impulse a bit smaller, and this impulse is not smaller, but still a bit smaller than the previous impulses. When we usually have those impulses smaller and smaller and smaller, we end up having that pattern that is called a wedge pattern. Let me draw it this way, starting from this and starting from this. And usually when we break that wedge, yes, after retest we go to the downside and go the flag stuff of this wedge go to the downside. It's usually a reversal pattern, and in this case you see that this breakout to the downside was proved to be a false breakout. Price immediately recovered, resumed the uptrend. It resumed the uptrend. So this wedge, this whatever slowing movement, becoming slower and slower and slower of that uptrend, slower, was resumed with new force to the upside. So this is the sign of continuation, the sign of confirmation that uptrend resumes. So let me take that, and what I see. Okay. What I need to do first, I need to show you my potential reversal zone. And my potential reversal zone, if you have seen from my previous videos, is exactly the zone of previous correction. So if you look at my videos, you may be seen that I was marking those impulses with rectangles, doing it this way. Boom. The range of an impulse is marked, yes, and the range of another impulse is marked also, from here to there, yes, and the range of another impulse is also marked here. So the overlapping zone is what I call the active zone, is somewhere where price will go because it is usually acting as a magnet, and somewhere here we will see a continuation, at least to retest the highs. So this is my analysis on it, and as you see, the zone coincided exactly with the previous correction. So previous correction, I just extend the rectangle of previous correction, and this blue box says, okay, this is the zone for reversal. Yes, it may start its movement a bit higher because we have tried to penetrate this zone, but we failed to install a new structure higher. I mean, we didn't close above, and we failed, and we broke into the downside. So it may start moving higher because of these spikes. But usually it goes deeper into the zone. So if the price, if then process, as Akil Stoke teaches, the same thing, and I use it very often. If the price goes into this zone, then I will be looking for buy. How can I get involved into a buying opportunity? Let me do some calculations. And what I see here, I see the movement of this, I call it X to A. Then I see a retracement of this, I call it A to B. Then I see an extension of this, it is 1.4. And then I see and what I see a retracement to 786, sorry, 786. So what is my prediction on the last week, for the last week? If price goes here and touch 786, yes, so this cipher pattern will be completed. If the cipher pattern is completed, maybe I will enter it at market, maybe I will go to 4-hour chart and see for some bullish patterns also, because the daily chart is not my trading chart. Most likely, if price goes here, I will switch to my trading time frames to see what's there, what opportunity to get involved I have. So I use patterns as a trend continuation, trend following. So let me place that position analyzer. What this position analyzer means, if you don't know, it means that the line between green and red is potential entry. So let us enter at this line. So the red line is written here, is called stop, and the higher line, it is written here, it's called target. So opened is in between the green and the red box. So stop asking me silly questions. Where is your target, mate? Where is your stop loss, sir? Something like that. Stop doing it. Look at my charts. Look at my watch my videos. Where is your stop, mate? Where is your target, mate? It is all on your chart. You can see it here. Open here, stop loss here, target here. Did you get filled? Oh, do you stay away? Okay, look at your charts and look at my chart, and there is a play button. You push the play button, press that play button, and you will see if price action hit my entry point or not. Very simple. Stop being idiots. Okay, guys, sorry for that. I've been emotional about these traders asking me these questions. Okay, that's it for today. Hope you remembered all those Gartley's types that I discussed today. Unfortunately, we didn't find any Gartley in live environment, but we find some cipher pattern. Okay, it is also good. I will post more and more Gartleys in my trading ideas, explaining my ideas, the Gartleys that serve as examples of what I'm looking at, what we do in my live trading room with my students. I will post them so you will see what my Gartley looks like in my next ideas, maybe videos or something like that. Hope you like that. If you do like, please subscribe to my YouTube channel, follow me on TradingView, support me with your likes or thumb up buttons, and see you next time. Goodbye, guys.